Eric Muathe at Muathe.com. Just want to do a quick follow-up on my previous video on BIOC. And here we can see that's the previous video. Check the description for this link on the previous video and other relevant links. Let's go to the chart. I want to do a quick follow-up. By the way, in the previous video, I was talking about 30.9 as being the level to watch. So take a look at whether it is holding above that level right now or not, because this is the main issue and has been the main issue as the stock has tried to move over the last 2 months. What we see here, and today is February 16th, 2017, stock is down about 14% for the week. Let's take a look at what's going on here. Couple of observations on the weekly chart. Looks like it is forming a double top, and I'll show you how this is becoming relevant given the long-term picture. That's not good. Also, we can see right now what's shaping up to be double top rejection. Every time the stock has tried to move above 61.8 on the weekly RSI, it seems to be rejected, as you can see here and here. That's not good. And keep in mind, we had talked about the possibility of a breakout in the breakout level that we were watching, and that was at 209. Holding above 209 was giving the stock a chance to move higher. Right now it's below that, so this is also another reason why this is now becoming one that could actually see a substantial drop. So the risk here is that the next major direction is down. In fact, the biggest risk for this instrument is lower based on how it has been trading. So check the previous video. It's going to be in the description, where I discuss it has a history of doing this, which is substantial pullbacks after every attempt to move higher. Stock has had a history of not holding on to gains, which I suspected was going to be the case here again, and already it is playing out that way. Now if we go and take a look at the monthly chart, the stock is back below 30.9, and as long as that's the case, with the RSI on the monthly holding below 30.9, that's another reason why I speculate that the next major direction is down for this instrument. And let me share with you one other view. If you take a look at all data weekly chart, you can see clearly here, if you draw a line connecting all the RSI highs, you can see why the stock is stalling with a double top this year. We've hit this line twice for the current highs here, and also as of the last 2 weeks. The last time we hit this line was here during this pullback at these highs. So given that this is coming back to a previously well-established line of resistance and already showing double top rejection on this line, here we can see another reason why the next major direction for this instrument is down. Oh, and by the way, just before I sign off here, if the stock is to change its mind, 2 things have to happen. It has to break out above this line. That's the first order of business. And then also, like we spoke in the previous edition of this coverage of this stock, it also needs to move its monthly RSI above 30.9. So without those 2 things happening, failure to move above 30.9 on the monthly would be bearish and continue to be bearish, and the weekly would continue to be bearish as long as the stock is showing resistance on this line, as evidenced by the recent double top here and here. So without breakouts on the weekly above this line, and also without the monthly moving above 30.9, this instrument is poised to go lower. Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. ESS.